Okay, so you're looking for some stability in this crazy market we've got going on in early 2025.
Yeah.
Understandable,
Yeah.
especially with the Nasdaq officially correcting and the S&P 500 down almost 6% since the start of the year.
Yeah.
But here's the interesting thing.
Okay.
Some sectors are actually doing quite well despite all this uncertainty around tariffs and a potential recession.
That's right.
Yeah.
When the market gets jittery, investors often turn to what are called safe havens.
Okay.
These are sectors that tend to hold up better than others when the economy is shaky.
So like a financial life raft in a stormy sea?
Exactly. And based on your reading, it looks like we're going to dive into 3 sectors
Okay.
that are considered classic safe havens.
Yeah.
Healthcare, utilities, and consumer staples.
Okay, let's unpack this.
Sure.
Your research from the Motley Fool highlights how these sectors are doing well. They even call out some specific ETFs like VHT for healthcare,
Right.
VPU for utilities, and VDC for consumer staples.
And the performance is pretty impressive.
Okay.
For example, VHT, the Vanguard Health Care ETF, is up a solid 4.5% year-to-date.
That's pretty remarkable
Yeah.
considering the broader market is down.
Right.
But I'm curious what makes healthcare such a reliable performer even when the economy is struggling.
Well, think about it.
Okay.
Healthcare is a basic need.
Right.
People still need to see their doctors get prescriptions filled
Uh-huh.
and manage chronic conditions regardless of whether the economy is booming or in recession.
Yeah.
That consistent demand helps keep the sector relatively stable.
It's like those products you buy no matter what.
Right.
Even when you're trying to cut back on spending.
Exactly.
Uh-huh.
But there's an interesting twist here.
Okay.
The article you shared mentions that Eli Lilly, a pharmaceutical company,
Okay.
is the biggest holding in the VHT EPF.
Okay.
And Eli Lilly is really focused on these new weight loss drugs.
Right. They've been all over the news lately.
Yeah.
But how does that impact the whole healthcare is a safe haven idea?
Well, weight loss drugs could be seen as more of a discretionary expense
Okay.
than, say, a life-saving medication.
Okay.
If people start tightening their belts,
Mm-hmm.
they might be more likely to put off starting a weight loss drug than to skip a crucial medical treatment.
So even within a safe haven sector, there can be nuances and potential risks to consider.
Absolutely. And in this case, Eli Lilly makes up over 10% of the VHT ETF.
Wow.
That means the ETF's performance is going to be heavily influenced by how well those weight loss drugs are selling.
Interesting.
This is where it gets really interesting for you as an investor,
Okay.
because it means you might want to look into VHT's holdings
Mm-hmm.
and consider if that level of exposure to weight loss drugs aligns with your risk tolerance.
That's a great point. It's not enough to just assume an entire sector is a safe haven.
Right.
You have to look under the hood and see what's actually driving the performance.
Exactly.
Now let's shift gears to utilities.
Okay.
What makes them so appealing during times like these?
One word: stability.
Okay.
Utility companies provide essential services
Mm-hmm.
like electricity, gas, and water.
Right.
They're heavily regulated,
Yeah.
which means prices are set in conjunction with government agencies,
Mm-hmm.
leading to predictable cash flow.
So you're not going to see massive growth,
Right.
but you're also not going to see wild swings in performance.
Exactly.
It's steady and reliable.
Exactly. And the VPU, the Vanguard Utilities ETF,
Okay.
is currently offering a 2.9% yield.
Okay.
To put that into perspective, for every $100 you invest,
Uh-huh.
you could expect about $2.90 back annually, just from dividends.
Hold on. Isn't that argument for utilities being perf-proof a bit shaky?
Hmm.
What if energy costs spike due to, let's say, a sudden disruption in natural gas supplies?
Okay.
As mentioned in that Bloomberg article you sent over.
Yeah.
Wouldn't that impact utilities' profitability and potentially even those dividends?
That's a really sharp observation.
Thanks.
While utilities are largely protected from tariffs on imported goods,
Yeah.
they are certainly not immune to fluctuations in the cost of the raw materials
Okay.
they use to generate power. That Bloomberg article highlighted a key risk factor.
So while utilities might offer a safe haven from certain economic storms, they're not completely weatherproof.
That's a great way to put it now.
Okay.
Speaking of things people always need,
Yeah.
let's move on to consumer staples.
Right. The VDC ETF you mentioned covers this sector with companies like Costco, Walmart, Procter & Gamble, Coca-Cola, and PepsiCo.
Exactly.
Basically the things you buy every time you go to the grocery store.
Think about your last grocery run.
Okay.
Did you cut back on any of these staples, even though the economy was shaky?
Probably not.
Probably not.
Yeah.
No, those are the things you just always need.
Yeah.
No matter what's happening in the world, people still need to eat, clean their homes,
Uh-huh.
and stock their pantries.
Yep.
Exactly. And that consistent demand makes consumer staples another classic safe haven during uncertain times.
Okay. It's interesting, though, the article also mentioned that both Costco and Walmart have recently seen their stock prices drop. Those are two giants in the consumer staple space.
Yeah.
Shouldn't they be holding up better?
That's where the interconnected nature of the market really comes into play.
Okay.
Even though people still buy groceries and household goods during tough times,
Yeah.
these companies are not immune to broader economic trends.
So things like rising interest rates, supply chain disruptions, and even consumer confidence can still impact their bottom line.
Precisely. And remember, both Costco and Walmart have a significant weighting in the VDC ETF.
Right.
So their individual performance can have a ripple effect on the ETF as a whole.
It just goes to show that even within a sector known for its stability, there's always a level of risk to consider.
Exactly.
There's no such thing as a truly risk-free investment.
That's an important point, and it brings us to a key takeaway for you.
Okay.
Building a resilient portfolio isn't just about picking the right sectors.
Yeah.
It's also about understanding the dynamics within those sectors.
So even if you're going with an ETF approach, like we've been discussing, it's still crucial to dig deeper and look at the individual holdings.
Absolutely. That's how you can get a better sense of the potential risks and rewards.
Okay.
Now, the article focused specifically on ETFs, which offer a diversified way to invest in a basket of stocks.
Right.
But you also mentioned wanting to explore individual stocks within these safe haven sectors.
Right. I'm wondering if it's possible to outperform the ETFs by picking the right companies within those sectors.
It's certainly possible.
Okay.
For example, within the utility sector, you could choose to invest in a traditional utility company or a company focused on renewable energy.
Now that you mention it, I remember reading somewhere that renewable energy companies might actually be more resilient in the current environment because they're less reliant on those fluctuating fossil fuel prices we talked about earlier. Is that right?
You're absolutely on the right track.
Okay, cool.
That's the kind of critical thinking that can really pay off when you're building a portfolio.
By considering factors like government policies, technological advancements, and even societal shifts, you can identify companies that might be better positioned for long-term growth.
So it's not just about finding companies in safe haven sectors.
Right.
It's about finding companies within those sectors that have a unique edge or advantage.
Exactly. But keep in mind that potential for higher returns also comes with higher risk.
Right, of course.
Picking individual stocks requires more research and a greater understanding of the companies and their competitive landscapes.
It's a trade-off, more potential reward, but also more homework to do.
Exactly. Now let's bring this back to you and your portfolio.
Okay.
Do you typically prefer the diversified approach of ETFs?
Yeah.
Or are you more comfortable researching and investing in individual stocks?
That's a great question, honestly. I've dabbled in both.
Okay.
I like the simplicity and diversification of ETFs, but I also enjoy the challenge and potential rewards of picking individual stocks. It sounds like you have a good understanding of the pros and cons of each approach.
Yeah.
The key is to choose the strategy that aligns with your risk tolerance, your time commitment, and your overall investment goals.
So is there a one-size-fits-all answer when it comes to choosing between ETFs and individual stocks?
Not really. It truly depends on your individual circumstances and preferences.
Okay.
But here's something to consider.
Okay.
Even if you primarily invest in ETFs, understanding how to evaluate individual companies can help you make more informed decisions.
Okay. It's like having an extra layer of insight, kind of like knowing how to bake a cake from scratch, even if you usually use a boxed mix.
I like that analogy.
Yeah.
It helps you appreciate the ingredients and the process, even if you choose a more convenient option.
Right. And ultimately, it's about becoming a more informed and confident investor, regardless of which path you choose.
Absolutely. The more you learn, the better equipped you'll be to navigate the ups and downs of the market and make decisions that align with your financial goals.
This deep dive has been incredibly helpful.
Yeah.
We started with your concern about market volatility and uncovered a whole world of opportunities within these so-called safe haven sectors.
We explored why healthcare utilities and consumer staples tend to hold up better during economic downturns.
Right.
We even uncovered some hidden risks and potential opportunities within those sectors.
And we talked about the different ways you can approach investing in these sectors, whether through ETFs or individual stocks.
The key takeaway here is that there's no one-size-fits-all answer.
Yeah.
The best approach is the one that aligns with your individual risk tolerance,
Okay.
your investment goals, and your level of comfort with research.
So where do you go from here?
This deep dive has given you a solid foundation. Now it's time to take that knowledge and apply it to your own portfolio.
Okay.
Yeah.
Start by reviewing your current holdings. Do you have any exposure to these safe haven sectors? If so, does that exposure align with your risk tolerance and investment goals?
If you're considering adding exposure to these sectors, think about whether you prefer the diversified approach of ETFs or the more hands-on approach of selecting individual stocks.
And remember, this is an ongoing process. The market is constantly evolving.
Yeah.
So stay curious, stay informed, and don't be afraid to adjust your strategy along the way.
Well said. Consider this the beginning of your journey, not the end.
Happy investing.